can be a little more difficult for a business owner that's trying to buy a home. What if the standard documents that you need to qualify just aren't going to work for your situation? Well, there's another mortgage product we're going to make you aware of today and explain how it works so that maybe you have a better understanding going into your next home buy. Welcome into the Smart Mortgage Show. I'm Ben George with Bill Litton, Cross Country Mortgage. And one of the things we like to do on this show is just kind of make you aware of different mortgage lending options out there. A good lender will do that for you as you're going through the process, ask you a bunch of questions to help you figure out what's best for you. Today, Bill, we're talking about P&L, profit and loss loan, correct? So give us a little background on this.
Yeah, so, we've done a lot of shows talking about alternate ways to qualify. So when the standard tax returns, the standard pay stubs, the standard W-2s don't show enough income, quite frankly, and they don't meet the debt ratio requirement, there are alternate ways to show the income. Now, different than 2008 and previous, a subprime loan, you could just say what somebody made. You needed no documentation to prove anything at all. And that's where we got in trouble. All of these products, you need to show an ability to repay the loan. And all we're doing is we're getting away from the tax returns, the pay stubs, and the W-2s, the standard ways, and we're looking at alternate sources. So we've talked about bank statements. Look at the bank statements, not the tax returns. We've talked about 1099s. Look at the 1099s, not the tax returns. Well, today we're talking about look at the profit and loss statement instead of the tax returns. And there's reasons why the P&L or the profit and loss might show enough income to where you would actually qualify for the loan with the P&L versus the tax returns where you don't qualify. So this product allows us to look at an alternate source of documentation to qualify for the loan.
All right. So what else do we need to know about kind of what goes into that process, Bill? Just kind of what you have to provide, what's different about this loan versus, some of the other stuff we talked about.
Yeah. So with the P&L loan, let's just say that on your business tax returns, you had a really great year in 2025. Okay. You filed 2025 already. You had a great year. But let's say in 2024, you took a loss. And when you average the 2 years, you're having a problem. And also, there is a way with Fannie Mae and Freddie Mac standard loans to only use the most recent year's tax return. So if you could do that, you probably don't need this product. But let's say that the findings come back. Fannie Mae and Freddie Mac will only look at this as a 2-year average. Okay. So now, if we're going Fannie or Freddie, we have to look at 2 years. Well, we might be able to use a 12-month P&L loan where we only look at the P&L and we only look at the most recent year. What that's going to allow us to do is to take the higher income and divide it by 12 months, which is going to put out a much larger income figure than combining the 2 years and dividing by 24 months. With the 2024 taxes really dragging down the income and probably not allowing us to qualify.
Okay. Yeah, some really good information there. I guess who typically, what's maybe the snapshot of the person that typically will go this route, Bill? I'm sure it's not something you use a lot, but what's the specific situation where you see this most commonly?
So most commonly, this situation is somebody who's self-employed and they may have a newer business. They haven't established in the first couple of years, most businesses lose money. In fact, there's a statistic that says 50% of all new businesses don't make it into their third year. And then of the remaining businesses, after 5 years, most of those businesses are defunct. So in the first few years, cash flow and really net profit can be either at a loss or very low. So maybe we want to eliminate one of those years because now we're in a much better trajectory. This type of loan helps with that. Also, if the company experienced a lot of debt in the first couple of years and that debt, 20 years ago, Fannie and Freddie didn't look at that. standard traditional mortgages didn't care. Well, now that, there's a section on the Schedule L of the tax return where they look at the debt and they say, do we have a lot of debt to pay back in the first couple of years? If you do, that drags down the income as well. The P&L loan isn't going to look at that. The P&L is not going to have a category to look at that debt and have it reduce the income. So that's also going to be very helpful. Now this P&L loan, again, it's not like an old school, just say anything you want loan, right? We're either going to need a CPA or a, registered tax preparer to provide the P&L. And they're also going to have to provide some information detailing, the start date of the business, the percentage of the business that the borrower owns. They're also going to have to say that they've analyzed the financial statements. So again, this loan isn't set up for somebody who really isn't making any money and doesn't demonstrate an ability to repay. If you're qualifying for this loan, you're going to be able to repay the loan. So it's not one of those ninja loans or liar loans that used to be very popular. This loan is just using alternate data, alternate income docs to qualify. And the payback on the loans, the performance of these loans is really good because we are verifying those things.
Yeah, great information, Bill. And two, for anyone that is going into this process maybe fresh, I mean, this is something a good lender will work through to help maybe identify along the way, right? This is not something you should have to know going into the process. Oh, hey, I'm thinking about a P&L loan. It's good to know that and good to ask those questions. But hopefully a good lender is going to be able to identify options like this that are alternative to the traditional ways to qualify.
So every client that we talk to, we basically have a decision tree, and we're always looking at what can we qualify them for with the best rates and terms. And of course, Fannie Mae, Freddie Mac, conventional loans, they're going to provide the best rates and terms. But if they don't fit, we immediately go to all the other products and programs that think outside the box, which, by the way, the rates aren't that much different, but it's going to allow them to still qualify, buy a home, enjoy the appreciation, and all the other great things that come along with it.
Awesome. Well, you can learn more. Go to smartmortgageshow.com. Get in touch with Bill. Maybe explore some options, right? If maybe you don't feel like you're in a great spot moving forward, maybe you don't know if you'll qualify, have the conversation, find out what options are available. Maybe you're in a better position than you anticipate, or maybe there's another option that you never think of or weren't aware of that might be available. That's what Cross Country Mortgage can help you with. And if you want to get in touch, again, text the word LEND to 21,000 to get in touch with Bill there. But again, all that contact information is in the show description as well. If you have thoughts, leave them in the comments below. We'll take a look at those as well. But Bill, any other thoughts on this before we close it out?
It just, if you're struggling to get qualified, there's this P&L product. There's also bank statements, loans, 1099s, verification of employment if you're not self-employed. So lots of different options. Make sure you're talking to somebody who's talking through all those options with you if you're having problems, because we want to apply all the products possible to solve your problem to get you to the outcome you're looking for.
Yeah, we've gone over some of those products as well in a little more detail here on the channel. So search for those and get a little more information on anything that you're curious about. We appreciate you watching. Thanks for being a part of the channel. Please subscribe if you haven't already. We'll talk to you on the next episode of the Smart Mortgage Show. This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.